Welcome back, everybody, to another episode of Anything Goes with Anna Rose. And today we have some penis power in the chair.
I'm so happy to provide the penis power. Here we are. This is great. Thanks for having me on.
I didn't even think of that setup, but I was like, I have had some powerful women talking about some really powerful things in terms of where we're going with today and why you're here, which I'm going to set up for the beautiful listeners and yourself. Lloyd knows why he's here, but it has been very pussy power dominant, and now we have some penis back in the chair.
I'm honoured to be here.
Welcome.
For the men.
Welcome, Lloyd James Ross. I have known you for over a decade. You have been instrumental. So I said to Lloyd, I always like to set up how I know the guest when they come into Anything Goes. And that's important for me. Because
I like the name, that Anything Goes with Anna Rose. You're a poet and didn't know it.
I know. Do you know what's interesting, actually? When I divorced, I had a really powerful friend but very successful businessman come to me and say, loves the episode podcasting is that you have to start again. Like, you got to delete all the episodes with Morgs. Like, with love. He said it really respectfully, but he was like, change the name, rebrand, you're Anna Rose. And I was like, get fucked. Like, I love the name of my podcast. I love that I've got that whole history in Morgs.
Yeah.
So anyway, side note.
Different season, but same,
Yeah,
same
continue. Energy.
Yeah.
No, but I have known you for over a decade. We connected through network marketing, which I'm still the greatest ambassador of today. You guys still have your
still
business.
yeah,
which I think is so powerful. We can touch on that.
Yeah, we will. That'd be awesome.
But what I want especially female listeners to know, and they know this story, everyone knows my story. If you don't know my story, you can go back and listen to a multitude of previous episodes. But when my life turned to shit, really only about 4 years ago, 4 years, probably 4 years ago, when I escaped my violent ex-relationship and was on, I think I've touched on this with you, but I don't think you really understand.
You did when you messaged me, or you spoke to me, I forget, but when it was, but you did tell me.
Yeah, and the very first, so the police were called, I called my accountant, and then I reached out to Lloyd. And because he is a man who knows his shit in the arena of wealth creation, you are formidable from my perspective. And why I brought you on, we're probably not even going to touch on it because we're going to touch around everything around it and as to why you're so aggressive in this share arena. Like that is your asset class and you are so aggressive in it, and I love that. And that's why I went to Lloyd, because I lost that portfolio in my first divorce. And then my practice husband, my only divorce.
My practice husband.
My practice husband and my only divorce. But I lost a lot of my wealth, and then I fucked up and I got into a violent narcissistic relationship. He stole half my wealth. And so I was starting again, and I remember, you don't know this part, but I had booked an Airbnb. I had my own place in Perth at the time. I'd driven myself across Australia to be with this fuckhead. And then I landed in Perth. It was traumatic and shit. And then I fled to an Airbnb. And in that Airbnb, that's when I reached out to you. I was like, I'm going to start again. I'm going to take radical responsibility. And I reopened my share portfolio and invested ever since.
Come on.
So the whole idea of getting you on today is because I have had, and this is kind of where I want to go with you, but I fundamentally believe Australia is it's in a world of hurt, but it's headed for more of a world of hurt. I think they are absolutely inflating debt. I think inflation is so high.
It's tricky, huh?
Debt's through the roof. They're not ultimately, I don't think our currency is going to completely debase, but there's definitely debasement occurring. And in that, you must be, I don't think investing is a luxury anymore. I think it's a must. Yeah. We can't keep our money in banks. I've had a whole series of this. So I have brought in an expert guest in every area, and when I was thinking about shares as an asset class, there was no one else.
That's good.
So welcome, Lloyd J. Ross.
Well, thanks for having me on. It's nice to be here. We've known each other so long, haven't we? And it's great that just being in the studio you've built is just amazing. We came to the opening here, but just to come through again today is just well done. It's just so good.
You.
So thanks for having me on. I'm excited to be here. I've got a lot to share on that specific topic that I'm sure a lot of people are going to just gobble up, because it's a really misunderstood area. And it doesn't have to be, but it is.
Yes.
And especially now in Australia, where property is becoming more out of reach, people are looking for another asset class that they can understand, that's safe, that's effective. And it is different. But I'm
you think
excited to talk
shares
about
are
it.
different? Is that...
Yeah, it's different. Like, there's elements of what people secure in the property game. There are elements of that in the investing in shares, but it's just easier to get into. Property's just harder to get into now. You still can, but it's just a bit trickier.
Yeah, and this is the thing. So I wanted to... So I've had a business expert and really she was a property expert. She'd built $70 million of property portfolios, lost it, built it again, lost it, sort of building again.
Yeah.
I've had Liv on who...
I know Liv.
I was like, I know you know Liv. And I did that because I'm not anti-property, but it is absolutely not my asset class.
Sure.
And it's interesting because when I've had them all in, I'm like, well, you sort of solidified for me why more than ever it's not. But just like I brought them in for property, I actually have just wanted to hand the mic over to the expert in their particular field.
Sure.
And you were shares. However, what I think is really pertinent and a powerful conversation to have today is why do you think, if you think it, maybe you don't, but just like mic is yours for a minute or 5.
Thank you.
To talk about why, if you think it, Australia is in this precarious situation and position at the moment with this inflation so high, property a hard game.
Yeah, I've been talking about this a lot on my YouTube channel. It's really popular because I think everyone's starting to bear the cost of the policies now in their back pocket. And you and I have spoken about this at events. I forget what event we were at. It was at a wealth summit. We were in the green room. We're having this conversation about federal politics.
Yes.
Because we both understand that we have a poorly led country, and we're all now the byproduct of the poor leadership. And it starts with leadership in any organization, including a country. If the leadership's no good, the citizens suffer. And two big things that are happening in Australia that are causing a lot of problems are immigration and energy. That's pretty much it. If you look at our commitment to net zero, Australia is a speck on the carbon footprint of the world.
It's ridiculous how we're hurting ourselves while the world superpowers are doing nothing. Yeah.
So that's causing some inflation because energy pricing is in every good and service. And people don't realize that either. So when energy is expensive, everything's expensive. And so if they solve the energy problem, they'll solve a lot of the inflation problem here, which will help us. You know, it won't debase the currency as fast. It'll help our back pocket. So that has to be a big policy for the next leader or the next party, right?
I worry, Lloyd.
I do worry too.
I don't think that's going to happen.
There's so many things we could talk about with what's happening there with the immigration really being fed into suburbs of Sydney that are Labor-based voters that is alleging to be, you know,
we can
the Labor Party pulling in votes, yeah?
They're buying votes. They're
buying votes or immigrating votes, yeah? So it's really difficult to talk about politics because it is as you know better than anyone, it's a very difficult place to affect change. Because what happens, I think, is you get infected by the toxicity of that institution when you join, and it's hard to affect it.
Well,
and I think one of the people who've done it is Trump. He's like one of the few people that's done it.
Yeah.
I don't know if it's easy in Australia because we're in the Westminster system here. It's not like you can just step up to the plate and run for leadership.
So many people say this, and I binge your podcast. We will put it in the show notes, rest assured. And I highly recommend everyone should and does. But it's interesting because I always say I think you'd be a great politician because you're so visionary. And I think the problem with politics in Australia, I never know where it's going. I'm like, oh, we're talking about politics. But I think the issue in Australia is that instead of politicians having vision and leadership, they just sling shit at each other.
Totally.
And also they are infected, having been inside the walls. And also I wouldn't go so far as to say, but I would go so far as to say they're bored. China is in the back pocket. China
totally
runs Australia.
Totally. Look, 100%. So how does this affect our back pockets? Well, when you're bringing in more people than you have housing, it inflates the housing sector. It makes renting harder. It makes buying harder. It's okay for those who own and like, pump it up. But what about like the new generation coming through who are like 15, 16, 17, and the younger ones again? Like how are they going to really it's not a good thing for the future generation. And so we're seeing these policies play out in everyday Australian lives. And it's trickier and it's harder. And if you feel like you're poorer, it's because you are. And when inflation's running hot, and the last CPI report that came out a week ago had inflation, and I did an episode on this saying this is a dumb idea for the RBA to drop the rates.
I heard it.
I was like, it's a dumb idea. And it did, and it's increased inflation again, which now means they're probably going to have to accelerate rates again. And so the decisions are being made to bring in voters, but at the same time, the RBA is trying to alleviate the pressure on housing in terms of mortgage owners, because what they don't want is massive defaults either. But what we need here is a lot of defaults. We need a bushfire to come through. We need higher rates to reset asset pricing across all the asset classes. I mean, if you look at all the asset classes, Bitcoin, gold, precious metals, housing, shares, everything is inflated. Yeah. Nothing is...
We're in the winner's curse.
Totally. Everything's inflated because the whole world's just been on this debt binge since COVID, because they just completely printed, made cheap debt, dropped rates to zero. Like, what? All that stuff they shouldn't have done. And so now we're at the end of that now. So that's where we are.
Yeah. So I heard an interesting statistic the other day, though. So, yes, Australians are hurting because it does cost more. We are getting poorer.
Yes.
I will even say with energy, I noticed the other day, so I don't look at my bills. I do. That sounds very facetious. I don't know the word. But I don't stress. I do not stress about money.
Yeah.
And then the other day, the electricity, this is a couple of months ago now, and I just knew that I had been paying on a 2x2. I know we live very beautifully and powerfully within our means, but my electricity bill had been about $130 for 18 months or something. And even when Ryan had moved in, and we have his son move in at the moment, but it's not that much of a difference. And the bill is at about $600. And I was like, how the fuck is the everyday Australian family?
I think about that a lot too.
How?
I think about that a lot too. But I think about it more broadly in the sense of not just their power bill, but their grocery bill because of the power issues. So if you think if you can move up the supply chain all the way to the farming, if you look at diesel pricing, if you look at the input costs of machinery, etc., and you look at running the power of large agricultural operations, it's all fed into at the manufacturing level or the supply level. It's all the way through the chain.
Yeah.
And so if you look at power, it does have this massive compounding effect until it hits us.
Yeah.
And so it's everywhere. It's in everything we buy. And so it's pernicious. It's really an insidious cost you can't see, inflation. So I think those policies aside, it's so difficult to change them. We can talk about them, which is great. And I think that's why I live on X. And now Alicia's just living on X too, because it's the place where you get...
I'm on there, but I don't...
It's because you get fed... If you're following the right accounts, etc., you're getting fed really good quality information instantly. And so the reason why people are waking up is because they're feeling the pinch. And back to your earlier point, the reason why what you said is correct is people... It's not negotiable anymore to invest because we have to exchange our currency for assets that can grow at a rate safely that's higher than inflation. Otherwise, progressively our wealth is destroyed, right?
100%. But this has been on every run at the moment when I'm listening to I listen to about 5-6 hours of podcasts a day at the moment, or audio, because I am in a self-professed separation season. I am my greatest asset. I am the asset class right now.
Yeah, I think that's true too.
And I will get into that because I know you speak to that so often on your podcast. But I really, months and months and months ago, when I was looking at tax strategy, when I was looking at the world, when I was looking at politics, when I was looking at economics, when I was looking at what it was, I'll be honest, was the straw that broke the camel's back was I read in the Australian Financial Review a couple of months ago that 51% of Australians were reliant on the Australian government for their main source of income. And I went, oh, we're fucked. That's it, game over.
Yes.
So that was my moment. And then I turned to Ryan and I said, I'm going in. Like, I am going inward. I'm in a separation season. I am going to just grow my mind, grow my education around every asset class where I want to continue to go aggressive.
Sure.
And that's led to this series because I'm like, Australians don't have a choice anymore.
No. And as a country, we're very uneducated financially across the board, period. Like, it just generally, but in particular asset classes that we can deploy cash into to grow outside property, because properties is so simple to understand, right?
But it is, yes. And also I know you do too, so I'm not here to bash it, but I rebel against property in essence so much, especially now, because I'm looking at the government throw shit at a wall with view tax.
Yeah, sure.
Bedroom.
Yeah.
Room,
the operating costs are becoming more aggressive because of those taxes. So if you think about it now, when you own your home outright, let's say no debt, you've bought it outright, it's now becoming costly just to own that, because you've got insurance, rates, upkeep, view tax. They're talking about bedroom tax. They're talking about taxing the PPR. This government is on a tax. It's just gone crazy with tax, right? So that it's more tricky now to hold a property debt free than it ever used to be. It's almost not yours. It's like you're paying a subscription now to hold a debt free house.
Well, I said it because we're looking at, so our tax strategy is we're looking to leave. Again, I've been super open about that. I love Australia. I will hopefully return to Australia. Yeah. But would you stay on a sinking ship?
Well, the subscription fee you're paying to be here is becoming more expensive, isn't it? So at some point you have to ask yourself, and this is how you assess investments too, and businesses and spouses, whatever it is you're doing, you think, is the juice worth the squeeze? And so in Australia, it's like, is the juice, meaning the lifestyle, worth the squeeze, meaning the money? And I think a lot of people now are discovering that, or saying to themselves, actually, the juice isn't worth the squeeze anymore. It used to be, but now it's not. And so that's probably what's happening. But it's happening in our circle. More people are talking about it than ever before.
That's like me.
Yeah, and that's right.
And that's what alerted me to it. And then I started to look, and it's lifestyle. So I'm not moving to lower my lifestyle. I absolutely, so we're looking at certain places. But it was interesting because I had a call, because your network is your net worth. In this season, I have never learned that more.
That's so true.
Because any decision I'm making, I can pick up the phone and call the person I need to get the answer I want, or get a connection to the person I need.
Yep.
But I called a very dear friend the other day who owns half of Bali, and I said, look, we're looking at Bali. Blah, blah, blah. I wouldn't buy straight away. I might, and if I did, it would be because I could rent it out, and it would be a business and blah, blah, blah. But I said, in the beginning, we might look at renting, and we're looking at multiple countries, and literally multiple countries to live in at different parts of the year. But I said, he was talking about leasehold, you get 25-year leasehold, and he goes, so you own it, but you don't ever really own it. I said, mate, you know what? That is the Australian property market today, though. No one owns their home. The bank owns
well, quite often the home owns them.
That's what
and owns their life. And,
right, or the bank owns it. So realistically, you're leasing your home. So people go, I got paid for not owning a home. And I'm like, I've earned my millions elsewhere. Business, crypto, which we can touch on. But ultimately, I was like, I look at it now like Australians are ultimately just leasing their home off the bank.
Yeah, look, once upon a time, it made a lot of sense to own a house, because if you go back 50 years, before we added a spouse to the income pool, before we dropped rates to the lowest in 5,000 years, before we increased wages astronomically due to resource booms, etc., and before we undersupplied the entire housing, before we did those things, it made sense to buy, because you could buy a place for 1 or 2 or 3 times annual salary. Yes? So it didn't own you for any long period of time. In fact, mortgage rates, and one of the things that did increase or inflated property out of those things was the term of the mortgage. So terms used to be 20 years. And so we've progressively increased that. And now in the United States, you can get them for 40 years. But the difference in America is you can have fixed rates at very low rates, if they are low, for 40 years. Yeah. So it makes more sense in America to own a home, because it's also tax deductible in interest payments off your personal income.
Yeah, I didn't know that.
Yeah, and it's also non-recourse loans, which means if you can't pay it, you can just walk out.
Yeah.
So all those things make it more sensible in America. That's why it's only 4 times annual salary to buy there. Whereas in Australia, it's like 10, 13 times annual income to buy here. On average.
I was going to say, on average.
Which is correct. Yeah, on average, because you can go to Townsville. You can go to some areas where you can still buy a $500,000-$600,000 house. But
would you live there?
No, you wouldn't.
And then your job opportunities aren't there.
Totally, exactly. Yeah. So in Australia, we have this problem. Now, so once upon a time, didn't have the problem. 50 years ago, right? And if you look at the interest rate graphs, the reason why it was so cheap, pound for pound on average versus wages, was because interest rates were 17%. And the reason they were is because there was an oil embargo in the 1970s that increased the rate of inflation drastically. And Paul Volcker in the United States had to come in and increase interest rates to 17% to reduce inflation. Because what people don't realize with inflation is the only way to bring inflation down is to increase rates above the rate of inflation for periods of time and bring the spending down. And that's what he did. And so in Australia, our parents, and they were like, oh, 17% interest rates. Yeah, but your house was $6,000 and your wage was $6,000.
Yeah.
Like, shut up.
Yeah.
Shut up. You're not allowed to talk anymore.
Sit down, mum and dad.
Right? Yeah, shut up.
Yeah.
So, it made sense then.
Yeah.
But if we wind the clock forward 50 years, it's the complete opposite.
Yeah.
Because all you're going to see now, if rates are at zero for an extended period of time, they're going to go up. Like, of course they're going to go up. And now we're seeing with the RBA and what happened with CPI last week, inflation is going back up. And you don't even have to see that to know, because you're going to go to a gas station and buy a maxi bond and it's $6.60. So it's like, it's
my
going
coffees, and I fucking refuse to let them go, are like $8, $9.
Far out. It's brutal.
It's crazy.
I know. So anyway, we're in the thick of this inflation issue. So what's happening with housing, and just for the audience to know this, my background is I'm a property lawyer.
I should have said this. You are a genius.
No, I'm not. I'm just, but I cut my teeth. I cut my teeth in property as a property lawyer.
Yeah.
I did it in conveyancing law. And then I went and joined the largest developer in the world, real estate, Aldar Properties, which is the biggest. They had 18 billion projects built. I was development manager on the sixth largest project in the world, and did master plan projects, did all the financial feasibilities with my boss there, and in the thick of it there. I'm a fully licensed real estate agent since I was 20. I cut my teeth on commercial leasing in here with the Ray White Group, with Greg and Andrew Bell on the Gold Coast.
Yeah.
And I've still got that license. I'm in partnership with my dad with the license with his real estate company. And I rebuilt together with my dad the family property business with property marketing for 7 years. And we turned the business around. And so, and I live on the Gold Coast, where it's like you're either, if you're successful, you're either in drugs or property.
Yeah.
That's the joke here, right? But so where half the people are buyers and half the people are agents.
Yeah.
But so I'm in this mecca of property.
Yeah.
And my dad says it's a miracle that I've never really owned a property, right?
But I love it. I love it.
It's interesting. So
I want to also say, Lloyd, like, so you almost got your CPA.
So I have
You were
this.
one exam.
I started this thing called a CFA charter.
CFA.
And people go and look at it. It's Chartered Financial Analyst degree, and it's the hardest degree in finance you can get. It's brutal. It's like 6-hour closed book exams offered once a year. The pass rate's 30% on every level. So I passed level 1 and level 2, and went to sit level 3. And once I get level 3, I'm qualified to see if I can put the designation off my name. Whatever. I ended up starting with Alicia Network Marketing, which is how we met, which is how we accelerated our wealth. So I'm like, do I need another degree or another letters after my name? Because I've already got 3, too many.
Yeah.
Right? But it's when I was in my job in Dubai or in Abu Dhabi in the real estate, the only way I could see myself pivoting into a higher paying role in, say, investment banking, whatever it might be, would be to have that. So that's why I did it.
Yeah.
But while doing it, I also really became the analyst skills I picked up were just insane. So
and
it
that's
helped
what I
me
love
massively.
about you. And I hear that in your podcast when
Sure.
you can you just understand markets and you understand politics, and you it's like you're like the Rain Man, I say, of I don't know, of everything combined, because you've got this really analytical that makes sense, like analytical mind. I know your story, but it's like where you will pull, like, you know, the Prime Minister or the President, was it America that bumped it to 17% with the oil embargo.
Paul Volcker did that in the 70s in the oil embargo.
And you'll take that and you can see all that.
Yeah.
An interesting fact I learned the other day, though, and I'd love your take on this, and I don't know why it sat with me so much, but I learned that mortgage interest rates, mortgage interest payments are not included in our CPI. So they're not included in inflation. They were taken out in 1998 from John Howard.
Yeah. Rent is. Yeah.
But I heard that and I was like, well, in Australia, our inflation rate isn't even really realistic.
Well,
I don't think it's 3%.
How interest rates translate to inflation is in the inflation of the property market, which then if you've got an inflating property market, inadvertently you've got inflating inflating rates, inflating insurance, inflating maintenance. So you are actually, whilst the
View
debt
tax.
is view tax, whilst the debt over time is eaten away by the debasing of the currency, so your debt progressively does get cheaper. Your wages, inflation tends to be, a bit higher than wages, so we always progressively become poorer with wages. But you do have to pay more inflation in those running costs. So that's why property has become more expensive just to hold, even with no debt.
Yeah.
It is harder. But the juice for us now still is worth the squeeze in Australia for the time being. So it's not, we have discussed and thought about moving away, but at the same time, we have so much family here, the juice is still worth it, right? But if we didn't, it would be different. You guys are sweet.
I keep looking at his beautiful wife, Alicia, who I'm very good friends with at the back there. I was like, come in.
Yeah, you're a live audience.
You're the queen. You're the queen who props the king.
Yeah, she is.
You're such a team. And I've seen that forever. I've seen that for a decade. And I love that. You guys are so family orientated. And I was out of there. I was like, the second I could get out of Perth, I was
get it.
See you later. So
I'm sure we'd be the same.
I'm less tethered, I feel
totally,
like.
yeah.
Zeus is my tether, but I will put him on a private jet. And
we've often thought about that too with our dog, Elvis. It's
private jets.
Same thing. Yeah, private
jets. They can be on the cabin. In the cabin. Yeah.
I'm just not rich enough.
Just get a group of friends. This is what I said. I've got a friend who is moving to Dubai, and if they go, they're putting their dogs on a jet with themselves. And I was like, I will pay to put Zeus on that jet with you guys, whatever, Sure. And then it's done.
Outsource, delegate.
Right? Network. Your network is your net worth.
That's very true too, isn't it? Yeah. Oh man, we could talk forever about all these topics. Well, Alicia's from Dubai. She was born there. And so I actually met her in Sydney before I got a job in this Abu Dhabi company.
Yeah.
And then when we moved to Abu Dhabi, I didn't even know where it was. And then it's only an hour and a half roughly to Dubai.
Yeah,
so
it's
I
like
ended up
Gold Coast
living
to Brisbane, I say.
Pretty much, yeah. So I ended up living in Dubai.
Yeah.
And so that's when we got together. And so for a time, I was a non-tax resident of Australia. And so I was earning US dollars tax-free over there. And then I repatriated back here. Together we came back together.
With a Harley?
So I chucked the Harley down. What I did was, when you come back, the company repatriates you in a container.
Yes,
and you're not supposed to put anything else in there. And I snuck the Harley Davidson in the container, and they paid for it to come back. So I had it back here and ended up selling it for profit. But I ended up selling it to buy more shares, incidentally.
Yeah, see.
It's in the book. But it is a good lifestyle in Australia so far for us. We've got good companies, good businesses here.
Yeah.
So we're going to stay, but it is tougher. But I think the reason why I got into shares is because when I was living in Dubai, it was very uncertain. You got to remember, I was in the thick of it there after the GFC, and it was just our company pretty much was going broke, and it was
hard.
Yeah, it was just the whole place caught the flu after America sneezed in 2008, so it caught the flu in 2010. So at that time, I was like, well, I don't know if I'm going to be here for long. I don't know what the market's going to do here. I didn't want to get all this debt. And in Dubai, too, you don't have a tremendous amount of pool and ownership laws to rely on with property. And there was a lot of, nightmare scenarios that were playing through my head. So I thought, do I want to own here? And the answer was no. So I thought, well, what can I do? Because I knew I had to invest, because I'd read Robert Kiyosaki's book, Rich Dad, Poor Dad, when I was like 16.
Who gave you that? How did you?
I'll tell you how it happened.
Because I'm like, imagine reading that book at 16.
Yeah, here's what happened. I was in grade 11 English class at school, and my teacher, Mr. Barber, said, gentlemen, when you leave this school, make sure you do two things. Oh. I was like, what's he going to say?
Yeah.
And he said, read two books. I was like, what are they? He said, one is The Richest Man in Babylon by George Clason.
Book.
And then the second one is Rich Dad, Poor Dad by Robert Kiyosaki. And the reason he said that, because he realized as a teacher, he was driving a beat up car, having a wage, and he's like, this is not, I could see it. I knew.
Wow.
I knew. And he knew. So he gave us that gift. And I went straight to the bookstore and I grabbed him. I don't know how many kids in the class did that and got them, but you've got to have agency. We talk about it a lot, Alicia and I, having agency. Mm-hmm. And agency is the skill set you're talking about of what investing in yourself. Having agency means you've got to be self-starting, self-directing. So I'm like, I took myself to the bookstore. I read them. And I remember handing my dad saying, Dad, you should read this book. You might learn something. Like a real smart ass. And he's like, and my dad's super humble and great. He's like, yeah, you're probably right. I might. And I was like, oh, it's nice to look back now. I'm like, he's living in this mansion. Like, shut up, you smart ass.
I love your dad.
Yeah, well,
your
awesome.
dad.
You can get him on the show.
I would love.
He
to
would
have your
be
dad.
good to have, actually. Yeah,
he's got an insane story. He looks like Elvis.
He does have an insane story, but so look. I read the book and I knew it. So if you read the book, it says, and I had Sharon Lecter on my podcast. So Sharon Lecter was the co-author of Rich Dad Poor Dad.
Yeah.
So she's the CPA in the book that wrote the book with Robert. Wow. And so I had her on my podcast and she said that in those days, Robert had actually built a few properties he put together because, again, in the 80s and 90s, it was cheap to buy property based on wages.
Yeah.
So he did the right thing. He bought these properties and she said to me, he had $100,000 a year of passive income from the rental income. And he said that when he left, that's when we wrote the book. And they wrote the book as a brochure to sell the board game. It wasn't even supposed to be a book. So they wrote the book and it turned into this. It's the number one best-selling book in financial.
I literally said to Ryan's youngest son the other day, you have to read the book. Like if you read any book, go read Robert Kiyosaki.
The problem with it now, though, is that you can't just go off and start buying real estate if you've only on $100,000. Like I read this statistic in America now. Oh, no, not in America, in Australia.
Yeah, I was like,
in Australia. You have to be earning $300,000 a year as a household. $350,000? It's certainly $300,000 plus.
Probably to break even.
To just pass serviceability for a mortgage with a 5% deposit. So that stupid policy they're bringing in, 5% deposits.
I was like, let's go here. Yeah. It's
like that. You have to be a high income earner to even leverage it.
But you understand this, and we can unpack this a little bit. They're making these policies to falsely prop up the economy, in essence, to ultimately keep numbers on the board, I think, to make sure that Labor government, any government really, because there's no vision and there's no leadership. So they're making poor decisions. Even though it's a 5% deposit, which everyone's like, huzzah, I can get in. I'm like, your serviceability still matters.
It's what they did in COVID, isn't it? They're seen to be doing the right thing is better than doing the right thing.
Yeah.
So let's see to be trying to help people.
Let's do an episode on COVID.
Well, you and I both don't hold back. I don't hold back on my podcast.
No.
I'm not afraid of telling people how I think because I have good intentions with what I say, and so do you.
Yeah.
Because you just want the best for people. Look, it's the carrot to hang to the wrong people. If they need 5%, they're probably not going to pass serviceability.
Yeah.
They're going to lock in. They're going to become what's called house poor. And house poor is when the house owns you. You're poor because of your mortgage. And Alicia said this to me, and I'm so grateful and very blessed to have a wife that's not all about, we have to buy a house to keep up with the job. We have to.
Yeah.
She's just like, and she says this to me, she has said it in the past, is I don't want to compromise our ability to, if we want to get Uber Eats one night, we don't have to worry about it. And I think of that a lot thinking, well, that's financial peace, isn't it? To be able to have what I call optionality. And optionality is a huge asset that people underrate.
Yeah.
Optionality is an asset, right? So they underrate their skill set in themselves and they underrate having optionality. And that's why most times to get financial peace, all you need is 20 grand in the bank and no debt. To have financial peace, that's all you need. People think that it's this big thing. I need this and this. No, you don't. You need 20 grand cash and you need no debt.
And would that number be relative to today's standards?
I would say. Yeah, I would say. It used to be 10.
Obviously, yeah, okay.
It used to be 10.
Yeah,
because what you're trying to do is you're trying to extend the gap between you and the streets.
Yeah, totally.
Because that's all people really think about. Like, oh, what if I get ruined? I'll be on the street. So extend the gap. And the gap doesn't have to be much. It's just to enable you optionality. And I was on a podcast yesterday and I said to them, look, all the businesses we've started. So back when we met, we both started network marketing.
Yeah.
And that cost us $1,000. So 2 $500 packs.
Yeah.
And that was the startup.
I started on a 30 days, so mine was like $300.
$300, right? So $300. And then all the other businesses we've started, our education business started with 15 grand.
Yeah.
The other business we have, the laundromat, was $5 grand down. The other one with Morgs was, okay, to be fair, that was 45 grand each because we did an event down in Sydney together and then we recouped it. But it wasn't drastic.
Yeah. And also, I will say, it was tiered, right?
Totally,
that was before, like, you had the capital.
Yeah, so we started network marketing, scaled the next one.
Correct.
Then we did the next one, and the other day I started a business and it required capital of 10 grand.
Can I ask what it is?
Yes, it's very cool. It's brand new. I'm super excited about it. And it's in the accounting space.
Okay.
And when you talk about your network is your net worth, one of my he's become a great friend. He's actually a former student.
Okay.
He really put this together and he invited me in. So I was actually brought in as a partner to consult with it and scale it with him because of what the elements of what were in the book, the new book, Become Time Rich. He's like, well, I want to So all of my businesses, including the beginning one with network marketing, was with Alicia as my first partner. All the other because you were at the book launch.
Yeah, of course.
I went through this partnership thing where I showcased all these partnerships.
Yeah.
So the guy that I've partnered with now with the new business, he was there.
Wow.
And he would have gone, oh, I would like to go on this adventure.
Yeah.
So we've started this new business. It's just launched, and it's where we connect people with accountants.
I love that. Oh, I'm big on this. I always say your accountant should be on your speed dial.
Sure. Like how many people can't find a good one?
Yes,
and how many
everyone.
times can accountants not find good clients? Right?
Totally.
So but again, it's the optionality of being able to do that. And so I'm thinking about writing a new book.
How do you feel about that, Alicia?
Yeah, I'm thinking about, because I'm seeing on the channel, like I'm thinking about writing a book and I'm thinking about calling it like Unmortgaged How to Build Wealth Without Property. Because I think now
Australia needs it.
Australia needs it, right? So I'm thinking, how do we do this? So we've built our wealth and we haven't owned a property.
Yes.
Like,
can I guess?
But we didn't.
Can I give a scale of how I think you did that though,
yes.
and then you can correct me?
Yes.
I think, and then I want to unpack this some more. So, because I want to say to the average listener who is listening, who now, because I love this is why I wanted you on. You just have this analytical, brilliant brain that will speak into the power of property, but then explain to people why it's not necessarily right the avenue. And then you have built your like a lot of wealth in shares. And I loved you just guys. If you want more from Lloyd, just go and listen to his podcast. You need to do longer episodes. That's my gripe with you. I'm like, I just binge them anyway, but I'm like, fucking bro.
They used to be like 6 minutes.
9 minutes is ridiculous. Yeah, like, give me more.
The new ones are longer now. Like, I think some of them are.
I'm up to date, but go and listen to them. But here's how I look at it with you, right? You guys, both of you, you worked on self fundamentally. You invested in yourself as an asset class. Yeah. First and foremost. Yeah. Then realistically it was like network marketing to build the wealth.
Yeah.
Shares were before that though, hey?
Yeah.
Yeah. So really it was like self, shares, network marketing, and now business.
Yeah.
Yeah.
Because the network marketing was brought in to scale the money making.
Yes.
To add more to the portfolio.
Was the shares.
Yeah.
Yes.
Because part of the whole process when you do network marketing, you say, why do you want to do this? And I remember my why was, I want to buy more shares.
I love
and the underlying reason for that is because we wanted real financial independence, freedom.
Yes.
And you only get real financial independence when you have a variety of solid assets that produce passive income.
Right. And passive income in shares, if for the average listener, because I know sometimes people get lost in when you're at this level, dividends.
Yes.
Right?
Which is a share of the profit of the company that they pay either twice a year or 4 times a year, depending on what country you live in. Do
you reinvest your dividends or do you take the dividends? Do you live off dividends?
Well, it's a good question. Currently in our portfolio, we are positioned with, we have 4 core positions. Mm-hmm. And out of those, it's positioned for growth. One of them is Warren Buffett's company, Berkshire Hathaway, which is...
Oh, you've invested in that.
Yeah,
I love that.
I've been invested for a long time. Long story behind it, but I actually went to the shareholder meeting in Omaha not long ago.
Cool.
And so that doesn't pay a dividend because he takes the dividends that he would normally pay and he reinvests them for you.
Yes, I like that.
Which is like, he's the best in the world. So that makes sense.
Sold.
Then you have to pay tax. But on the other ones, we do get a dividend. Like we got dividend the other day. It paid for part of our trip to New Zealand. It was nice. And
was that one of the screenshots you shared?
No, that
was just a gain. That was a day gain.
That was actually a gain in one of our Chinese company positions.
Yes.
So we own, that was the Alibaba position we have, but that was a 1 day gain because it's just...
Guys, it was insane.
It's gone off. But that was a bit of fun. So I call it gain porn. It's like, it's my gain porn.
I got off on
and I have shared lost porn too, Well, lost porn's fun as well. But not as fun as gain porn. But
no, never.
So that pays a dividend.
Yeah.
It pays a special dividend and a regular dividend. So when the company does really well, it pays a special dividend. It's like, hey, we really did really well. We're going to give you some extra money. And another company, which is a health company in the United States, they paid us a dividend too. So those dividends are very low because they're US-based or domiciled companies. They're on the US exchange. And in America, they pay less dividends as companies because the tax legislation in America is there's no tax relief for dividend income.
Right.
But in Australia, there's relief under what we call imputation credits, which is called franking credits, where the government's already paid the tax, as you know, on the profits of the company. So when they pay us dividends in Australia, for most companies, they will not tax them again. So we get tax-free income from certain holdings in Australia. So for a long time, I was a big CBA shareholder.
Yeah, which is Commonwealth Bank.
With Commonwealth Bank, yep. And so they would pay us dividends for like years. We'll get, and it was just tax-free income. So for years, we were getting paid tax-free income from them, which is great.
Yeah.
But so to answer your question, we spend the dividend income. We don't reinvest it. Because we do like to spend it on things like the trips, because
that's
it's such
the point
a small
of it,
amount.
though, and that is
Totally.
that is the point of it. Like I know, so the wealthiest people, it's like that I know that I read about in books and etc. They don't spend money to look rich. They spend money to they invest, and then we use that money that our money is making money off, and that's what we play with.
Yeah,
we don't
absolutely.
take them. Like I am very aggressive in business.
Yep.
My asset class.
I would agree.
Is business. I said to Ryan the other day, fuck, if I looked at what I've spent in business, I regret nothing. But and invested that, say, into just shares or just Bitcoin.
Well, let's unpack that.
But I wouldn't do it. I said.
What's interesting is that for people who are listening, I agree with you. You are aggressive in business, and it's definitely your circle of competence. Yes, and you're great in that space. I mean, great would be an understatement. But
thank you, Lloyd.
But what everyone doesn't realize is that shares are business.
Yeah.
So let's have a look at that. Like you're owning a share of a company.
Yeah.
So when you're an entrepreneur and you build startups or you buy a small business, like our laundromat business, we bought that. So it's an acquisition of a very small business.
Yeah.
And then you build others, right? And so if you're building or buying, the very top of entrepreneurship is where you cannot out-earn in more businesses or building them than what your capital can earn if you just buy a great one. You just can't. And that's why Warren Buffett sits at the very top of entrepreneurship, where the only way to move the dial in his wealth of 150 billion is to buy entire operating companies that are just going to explode. That's the only way to move that wealth at that top level. So we're not there yet, but at the very top level, effectively, we're all kind of like in shares. We just do it on a small scale. Yeah. So like in our laundromat business, my business partner and I own 50% of the shares. There's 2 shares. We own one each.
Yeah. That's like here. Yeah.
So there's one each. So each share's worth, 200 grand.
Yeah.
So same as
yeah.
You are a shareholder of a company.
Yeah.
It's just that at a bigger level, you and I can buy companies like Google. We can buy companies like Alibaba. People can buy shares of Warren Buffett's company, Berkshire Hathaway, which is like the largest company in America by hard assets.
What's the, I always forget, I'm invested in it, but what's the one that Warren Buffett says, if when he dies, in his will, he says he wants his wife's, all of his money to go into this particular share. What's that one?
So when you're looking at the share market, it's completely, it's very unknown from Australians on what it is, how it works. But effectively, when companies get to a certain size, like let's say Guzman and Gomez.
Yeah.
We all know Guzman and Gomez because we've all eaten there. We love it. It started as a small business with a couple of franchises and it grew, got to a certain point, and then, we need more capital, money. That's just a sexy word for money, isn't it? Makes you sound smart.
Yeah.
We need more capital to grow more franchises.
Yeah.
Yes? So you can do it 2 ways. You either go and borrow the money, which is called debt financing, but then you got to pay it back consistently with cash flow, or you can sell a piece of your business to private investors.
Yeah.
Or you can sell it to a lot of investors and go public.
Yeah.
So when you go public, what happens is you get underwritten by an investment bank. They buy all of the shares of the company and they relist it on the exchange and take the margin.
Yeah, right.
So when you go through what's called an IPO, which stands for initial public offering, it's the initial time that particular business or company is being offered to the public to buy shares, initial public offering. And so when it goes and is offered to the public like you and I, we can all buy shares in it. Which is what happened to Guzman and Gomez.
Yeah,
and the owners,
is this a real example?
It is a real example. And then they held the majority. So they might have held, say, 20% of the company. I don't know the detail.
Yeah.
But they own a large share. So like Mark Zuckerberg, when he listed Facebook, he owns a large share of Facebook.
He'd be the majority shareholder.
He's the majority. He's the biggest shareholder.
Yeah.
But mums and dads and all, we can buy shares too.
Yeah.
So you are buying into these great businesses. And so if you understand that concept, then you start to look at investing in shares completely differently and how it should be looked.
It's interesting because the energy I get from you is that people think, and you would know far better than I, so I'm like, wow, what a concept that. So the energy I get from you is that people look at shares as like they misunderstand it or they're not aggressive. That blows my mind because I love shares. Like I am shares and crypto are mine.
Yeah, but you're a minority. You're a 1%er.
Yeah, I didn't realize that though.
You're a 1%er. Because people think that shares are a little ticker on a screen, a candle on a screen.
Yeah, wow.
They think they're these things that move around on a screen. That's what they think shares are. Like that's how they operate with them. But Warren Buffett said that, and he learned this from Ben Graham, who's his mentor. He said that the best investing is done correctly when it's most businesslike.
I would agree with that.
All investing is best when it's most businesslike.
Yeah.
Yes. So most people operate shares on a complete opposite of that, which is emotion.
I was about to say it's all emotional.
Yeah.
And
so
the worst way to make a business decision is emotional.
Totally.
Yeah.
Right? So if you think about that, that's why people suck with trying to identify shares because they'll look at, this company that my drunk uncle told me to go look at is 40 cents. It's this new mining company that started up. What do you think? Like, tell me about the business. Huh? What business? Well, it represents share ownership in a business. Tell me about the business.
Yeah.
Well, it's not earning any money. Well, that sucks. It's got a lot of debt. Well, that sucks. And the leadership sucks. Well, that sucks. Yeah. Why would I buy that business?
Yeah.
So when people go and buy shares, they don't know these things. So they'll go and buy them willy-nilly and they'll hear about them and they'll think they'll have a portfolio of all these little positions of all these micro mining companies and Tesla and all these things they've heard about. And that's how they operate it, right? And the reason why Warren Buffett says to most people at the Berkshire Hathaway meeting and in his will to his wife Astrid when he dies as to where to put the money she inherits is into an index fund.
Yeah. Because
what an index fund does, and it was actually invented by a guy in the 70s as well. 70s was a good time, right? For finance.
We were born in the wrong era, friends.
Yeah, but Jack Bogle invented this thing. He actually started the company Vanguard.
Okay.
And so
what is that? Share? VHS?
Yeah, there's lots of different ones, but he started index funds and it's probably the greatest invention in personal finance ever. Yeah, so what he said was, well, people suck at investing in shares. Financial money managers, they are terrible at deploying the capital too. Like most money managers suck. They don't outperform the market. Yeah. They charge 2 or 3% fees.
Absolutely proven.
Totally, yeah. Statistics there all day long. They suck.
Yeah.
So he said, well, how can we get the lay person to be able to put money in a group of companies that completely diversifies the business risk? So if one of them goes broke, you don't lose your money. And how do we do it in a way that's low cost so they don't have to get hit by fees? And he created the index fund.
What a legend. I didn't know that. I never thought to, I mean, I'm not interested to seek the origin of it. But
sure, but that's how it started, right?
Yeah, I love that.
So that's why Warren Buffett says when he died, in his will, he says to his wife Astrid, put the money into an index fund and put them, he actually specifically tells them about a Vanguard one.
Yes.
And it tracks the top 500 companies that are domiciled in North America. Yes. Amazon, Google, Facebook,
McDonald's,
Yeah, and historically from 1957 to now, which is 70 years, right?
Don't ask me.
It's returned on average 10.26% per annum.
Which, in the game of survivability in the world right now, having to beat out inflation, that's it.
Yeah, if inflation's running at 5% as an example, you're beating it by 5 on average.
Yes.
And so that has been the greatest wealth builder ever.
Yeah.
Ever. Now, if you look at Australian property, why that's been effective for 50 years is because those 4 things happened that are unlikely to continue to happen.
Yeah.
Like you can't just get another third spouse.
No, unless you go polygamy.
Yeah, you can't just rock interest rates back to 0.
No.
So those 2 big ones are gone. You can extend terms and you can maybe get wage inflation up, but you can't do the other big ones.
I don't think I will. Yes. So I would say to the wage inflation, I unfortunately don't think we can because if 51% of Australians are currently on the government tit,
I don't think the policy
can't
represents
keep printing money to. So I think
totally
3
agree.
are gone.
So 3 are gone. So we're not going to see this repeat of 50 years of this golden era called the Goldilocks zone of property.
Yeah.
Right? So if that's the case, one thing it's going to be trickier to do is leverage against it, because the reason why people have built so much wealth against it too is because of leverage. So you can buy a piece of real estate, a property that's producing income. The banks will lend on it at 95%. So you're borrowing their money, and then it's paying itself off over time with the rental income, and they're leveraging the gains. So you're getting massive 5x gains off your cash, which has been what has been the driver of property wealth in Australia. And you can't dispute it.
Yeah.
It has
100%. 100%.
It has been effective, right? The question is, can you continue with it? And the other thing is that outside that, the share market is the greatest builder of wealth ever.
Yeah.
And the reason for it is because it's businesses. And the reason for that is because businesses produce the most value.
And I remember, yes, 100%. And I'm so blessed because I had a great accountant, lol. I was 25 and it was the firm I had worked in when I was 19. I've changed accountants now just because they're bigger, smarter, bigger in crypto and things like that. And tax strategy, just super proactive. But I remember I was 25 years old. I was earning bank with Isogenics and just cashed. I was cashed to my eyeballs. And I walked into my accounting firm and I said, what do I do with this money? I want to be smart. I want my money to earn money now. I'm cash rich. And so now what? And brilliantly, my accountant sat me down. We were in a boardroom. I've got a photo of it. And he said, what are your values? And I knew them. So firstly.
That's a nice question.
Right? But I knew my values. So I said health and freedom. And integrity, right? And he goes, okay, beautiful, freedom. What field does property, let's look at asset classes then, right? So I'm 25 and he's like, you realistically in Australia, you're going to go property or shares. And I was like, okay, well, I've got cash for either. And he said, you do. Now let's look at property. And he broke down numbers pretty broadly. But he said, but you'll also, for a woman that wants to be free, be dealing with tenants, be looking at insurances and this and upkeep and maintenance. And I was like, sounds fucking terrible, right? But that's my value set.
Same as mine.
Then he got the S&P 500 on the whiteboard on a big thing, and it was just this graph that went to the right and up, and there was corrections and dips. And I went, and he goes, or you could start to put dollar cost average into this. Yeah. Every year, every month, every whatever, and leave it.
Yeah.
And I went, that sounds really fucking smart.
Don't have to manage anyone.
Yeah.
Click a button.
And he said, you love business. Do you love business? I said, I love business.
Yeah.
It's just I was born to be in business. Yeah. And he said, well, you can invest in other people's businesses and leave it. Yes. And I went, oh, that's brilliant.
Well, it's brilliant on a smaller level too, as well as a bigger level. Right? Yeah. For example, if we bought I like to use the laundromat as an example because it's such a simple business, right? Yeah. But if I said to you, hey, we want a capital, why don't you buy shares in the business? Okay. And you put it in and you just get print. So that's the same as good businesses you're buying in shares too. Yeah. And people don't realize this because they up the banks, and by quite rightly they should, because the banks are just they're getting worse and worse. But I thought to myself, and I saw this on the writing years ago, and I thought, well, the banks they're winning the game here, so I'm just going to buy the bank. So every time I bought shares in Commonwealth Bank.
That's so
bought shares in Commonwealth Bank. I'm like, just if you can't beat them, join them.
I wish I did.
Because people said to me, Lloyd, why in property? I said, I am. They go, what do you mean? I said, I own a lot of Commonwealth Bank shares, and it's the biggest property I own in Australia.
Yeah, so smart.
It is. It's the biggest property in Australia.
Yeah, and I don't doubt that. Yeah.
Every time I walk by an ATM, Commonwealth Bank, I used to kind of just I own a little tiny bit of you. So that's the best way to approach shares. Yeah. Is it's easier, it's simpler, no operating costs. You can scale, but you can't use leverage as easily or as safely, because the way that it works is if it falls, you can get margin called on your holdings, which means you've got to post margin. That's a fancy word for extra money. Yeah. Into the portfolio to bring the LVR back to where it should be. But you don't get margin called on residential property. But incidentally, you can get margin called on commercial property. And my dad has a friend, he was worth about 400 million before the GFC, and he got margin called on all his commercial property, and he went broke.
Of course.
Right? So you have to be careful.
$400 million.
Yeah. He's probably got a couple of mil still, but he basically lost a lot of his wealth. Yeah. He'll be okay. Yeah. But so it's interesting. But, and again, I think for the audience too, I think the reason why I wanted to mention all those things I've done around real estate is I understand it.
Yeah. I think you understand it better than anyone. I understand. You were raised in it almost.
Yeah, I understand it. It's fine. Yeah. My dad will call me up and offer me deals. Yeah. And so I'm like, that's it's fun. Yeah. And even he said, hey, the office next door. And I was like, I might buy. I'm open to deals.
Yeah.
And I look at it and assess it, and then I look at it against what else I can do with the money. And that's what's prevented us from buying real estate, because I can usually find a better place for it with higher gains and growth. Like all those businesses we've got, they're going to scale. Like the wealth is going to be way bigger and better and more fun than property because it's cash flow. But I'm not averse to it. And how I would look at it now would be I'm with one of our companies, I'm more open to commercial real estate. It's because it's more business-like. It's more business-like.
Yeah.
And I'm more open. Like I like how my, Reese, my brother-in-law, he married Alicia's sister, and I like how he approaches property too, because it's how I would probably do it if I was in the sector. Is it's buy a property for investment purposes and rent where you want to live.
Yeah, rent. It's a rent-vester. That's
Rent-vester,
called a
right?
rent-vester.
And I think that there's elements of intelligence around that.
Yeah.
And you can do it that way. But the issue with property in Australia is, one, everyone has been indoctrinated to think and understand by their parents and other people that it's the must-have, and you must do it, and you must get on the ladder, and you must, no matter what happens in your life, do it.
Yeah, you're
It's the be all and end all.
unsuccessful if you do not.
You're a peasant if you don't have real estate.
Yeah.
Right? You haven't made it.
I'm poor.
It's become a rite of passage.
Yeah. It's
Rite of
wild.
passage. When I get telemarketed from people, they call me up to sell me solar. I'm like, no, I don't have a mortgage. I'm a peasant. I go, sorry,
poor.
sir. Get them off. But they're forced to do it that, so they're indoctrinated.
Yeah.
But then the other thing too is they move into it without understanding the due diligence.
Yeah.
So I had a friend of mine reach out to me and said, Lloyd, we're looking to get our first property. What do you think? And I said, what are the numbers? He said, what do you mean? I said, well, what's the mortgage repayments, including P&I, and what are the operating costs of the property on a monthly basis? He said, I have no idea. I said, well,
blows my
why are you going to go into this?
Yeah.
And so that's the problem. And all of a sudden someone buys a place with a big mortgage and they handcuff themselves to that death pledge for 30 years.
Yeah.
And in their mind, they're imprisoned, in their career, they're imprisoned, in their relationship, they're imprisoned. And then all of a sudden the wheels fall off their life because they've bought into the hype.
Yeah.
And that's what I want people to avoid.
Yeah.
So I'm not all against property. It's just do it effectively for the right reasons.
Driving here, I was like listening to, I think, maybe an oldish podcast of yours, but you said you were like, I love property. I'm not against property, but I just don't want people to be like suicidal over their property, essentially.
Which
right?
happens.
Correct. And then you talked about that.
Yeah.
You were like, I don't want people to end their lives over it. I think the big picture thinking for me, and especially in the series that I have brought to the people, is that I wanted to make sure that people understood asset classes first and foremost, because a lot of people are like, oh, I don't invest, but they do because they have brought a home. So I'm like, well, you have property, you have an asset class, because property is an asset class. So I wanted to introduce this ideology of asset classes and predominantly explain and get the experts on to explain how it is just not a luxury anymore. It is an absolute necessity. And then for them to find the asset class that feels the safest, the best, and the most value driven for them. Because again, business is mine. Like if someone came to me with a proposition, 100%, even commercial property, and it was, whatever, a couple of six figures buy-in, I can guarantee you I would talk myself out of it because I'd be like, oh, but I could start this other business.
The opportunity cost is too high for you.
Yeah.
And a lot of people don't understand opportunity cost because when you say yes to one thing, you say no to everything else.
Correct.
So it's where is my money best deployed to get me the highest return safely that I understand that can scale.
Yeah.
And a lot of people aren't assessing their investments like that. So they're looking at businesses, shares, real estate, and other things without that question being asked.
Yeah.
Where can I get a better return or a higher return? So what happened to me with the laundromat was we were in Bali and I was talking to, it was Reese actually. He said, hey, it would be cool if we bought this place and we lived next door because we were talking about having babies at the same time, etc.
Yeah, yeah.
I said, that sounds cool.
We'll have them with you guys,
it's a high value family, right? And I'm like, that sounds cool. So I looked at it. There was a deal on the table. Actually, my old man had he listed it. He owned he knew the developer. So he sent me the details. And I looked at it and I did the numbers on it and I got back from this. So I put an EOI when I was in Bali. I was laying in doing a sound healing and I was thinking about this expression of interest on a real And so I got out of the sandhill and they go, how was the sandhill? I said, well, I thought about this feasibility for this property in
Put in an offer.
Yeah. So when I got home, I looked at the I put it in the offer.
I know.
Anyway, I looked at it and I just always do the numbers.
Yeah.
I looked at it and I realized, okay, well, look, if I get it, the deposit is 200K.
Mm-hmm.
The stamp duty is 100. The mortgage insurance is 70.
It's fucking
Plus. And I thought, okay, do I want to put 400? And I know settlement was probably only still 2 years or whatever, but I would have lost control of the deposit. And I know there's deposit bonds, but at the time it was like, do I put the money in there? And I don't realize to myself, then I lose control of that equity.
Mm-hmm.
And I also did the numbers. Do I want to put 400,000 into this asset? And do I then want to lease it? And do I want to live there? And it was just too many unknowns.
Yeah.
And so when I realized that, the writing was on the wall, the data will always tell you, and your gut will then tell you.
Big on that.
Right? So I was like, and I was like, what?
Yeah.
So then I actually said, no, send it back. I said, hey, I'm going to pull. So you got to think about it. You got to renegotiate out of the family deal. So I had to say to my dad, no, I'm not going to proceed with that deal. And mention to Reed, hey, I'm not going to. So it's this ability to actually know your boundaries and where you're going to play and disappoint and no.
Yeah.
Right? And what happened when I did that was the laundromat deal. A buddy of mine came to me and asked me about a real estate deal. And he said, what do you think of this? I said, it's terrible. He said, what should I do? I said, why don't you buy a business? You're great at subscription businesses. You should buy a laundromat. He's, well, I have no money to do that. I said, well, I got money. And he said, well, I can run it. I said, great. We shook hands. On the way home, he called up a buddy and he said he's selling one. We put an offer on it. We got the financing. We borrowed all the money. So we borrowed all the money for that. It's a 40% margin. Think about that.
Yeah.
And we earn more net after debt than what that property I was going to buy is going to make. And it's $2 million. Think about that. It's 10 times more, but our business makes more cash flow. It's insane, right?
This is my issue with, this is why I love business so much.
So I'm in the bank and I'm going to sign the paperwork to borrow the money. And the young guy, he's about 24, he's studying medicine, he's in the ANZ bank, and he goes to me, why aren't you buying a property? And I was thinking to myself, mate, I'm on this side of the table.
Yeah.
And I'm buying this thing and you can see my bank accounts.
Yes.
And I was like, and you're on that side of the table and you're telling me, why haven't I bought a property?
But that's the mindset of Australians.
I know. I was just like, did you just ask me that?
Yeah, because they don't get it. They don't get it.
It's interesting too because the lender because we were with ANZ and I called up the bank, the guy in Brisbane to do this deal for this because they don't like lending money on businesses.
No, they don't like businesses.
They hate it. So I was like, man, they made me jump through so many hoops. I'm like, guys, I could buy this for cash time. But they go, I understand, but da-da-da. So it was a hassle.
Wild,
it was like brutal. I was like, oh my God. But I wanted it to get done because I want to do another one with them. And we want to keep buying them, right? So I was like, I need them as a partner and I wanted to use their money.
Yeah, of course. So when you can, yeah.
So I'm talking to him and he starts talking to me about shares because we have this portfolio. And so you got to provide your net worth statement to the bank. So there's this multi-million-dollar share portfolio there, no debt, no beautiful.
Yeah.
Income statement, pristine net worth, balance sheet. It's there. And he said to me, oh, yeah, we can't use the shares. We can't use any of that as collateral. Yeah. We can't even use ANZ bank shares as collateral. They don't
trust their own shares.
You can't use your own bank collateral. Anyway, so that's how Australia works. Anyway, so he said to me, he said this is a regional manager of a bank, one of the biggest banks.
Yeah.
What's a blue chip share?
Yeah, wow. How old was he? Older?
Nah, he was maximum 40.
Yeah, still.
40. But
people just don't know.
They just don't know.
People don't know what they don't know.
So look, property bought under the right circumstances can be super effective. However, when I have opportunities like buying small businesses, starting small businesses, and buying companies that Warren Buffett runs and buying Chinese pieces of some of the best Chinese companies in the world, it just doesn't make sense to me.
Yeah.
But that's not everybody, and I get it. So if you do have a home, I've got this saying I say now, one car, one house, one spouse. One car, one house, one spouse, which is a little bit of a jingle for keep things simple.
Yeah.
So have your home, don't overgear.
Yeah.
Understand the numbers and have one. You don't need to buy. We went to Dreamfest, right? Morgan's event. So there are these round tables. There's a girl sitting there and we're doing these rounds. So they're peppering questions. And she said to me, Lloyd, I want to buy 10 properties. I was like, why? And she went,
I don't know.
I don't know. I thought, well, that's interesting.
Yeah.
What? And she, you know, we set these success rules in our mind.
Yeah.
That we must have X, Y, Z before we're successful.
Yeah.
So she set 10 properties. I was like, that is real. Number one, really hard. Going to take a long time.
Yeah.
And it's a lot of leverage. And it can be risky.
Especially if you don't know why you want to do it. Like, I think
it's almost probably soul destroying. Like,
and that's why I'm so grateful for, like, I was 25. Like, I want to get rich and I want my money to earn money. Well, what the next words out of his mouth are, what are your values? And I do it to everyone today.
Totally.
It's like, what's your why or what are your values?
That's right. And so that's the question. That's why I asked that question.
Yeah.
And I said, well, let me ask you this. If time and money were of no object, what would you do with your life? And she said at the time, she actually has a coffee business. And she said, well, I'd be a counselor. I'd help people. I said, well, that's cool. Do you think at your funeral, when they give you eulogy, they're going to get up there and say, here lies such and such. She had 10 properties.
Yeah.
Or do you think they're going to get up and say, here's such and such. She made a real difference. She helped all these people. What eulogy do you want? And she said, well, I want that eulogy, the helping people. I said, well, what's stopping you doing it today? She goes, what do you mean? I said, well, you're a coffee person. Why don't you become the coffee counselor? Redeploy your Instagram, become the coffee counselor, give people little counseling pieces on their cups and order these cups in from China. And every time they come to your coffee shop, they get a nice fortune cookie style counseling thing. And you brand yourself as the coffee counselor and start helping people today. And she just went,
I would have cried. I probably would have cried.
She just like, what?
Yeah.
But that you got to think of life like the real reason to have investments, as you mentioned earlier, is to outperform inflation so that you're building wealth with your currency and you're buying assets that produce passive income to give you optionality.
Yes.
Optionality to then pursue what you love.
The
like
life
this.
that you're doing,
like you're living this life that you want.
Yeah.
Like, but people I think they're just so addicted. I must have these properties because that's their chosen asset for passive income. Fine. But do it for that reason. You know, don't do it just to keep up with the Joneses or have social status.
Yeah.
You know, I think that's where they get caught out.
And and the big thing, all of that is to me as well, always making sure to me, I always just say, never miss the point along the way. Like, you cannot miss the point. So while I build, I do,
live.
You know, I go live. I live a little. I have some fun.
I think that's what I loved about shares. Like when we came into network marketing, the reason we started network marketing was because you can develop weekly cash flow, depending which company, and we were going to put it into shares. And lo and behold, we started earning thousands of dollars a week, just like what happened to you.
Yeah.
Because you also helped us because we went to an event where you were speaking and your success and vision helped us. So we're like, oh, let's do it, Anna. She got her car paid for. Remember that talk you did?
Yeah.
And I
went through the whys. Like I had my first why. Yeah.
So your success helped us then but then how we structured was, well, let's put it into shares so we can then spend the passive income. So the whole idea was to accelerate our income. Now, if people looked at something like that as a side hustle, what I noticed was after $500 net, you're earning more than a property investment that's worth $1.2 million. So you can actually have regular cash flow faster through a business enterprise than a property portfolio. So when you said earlier, not everyone's built for business, I agree. But what I do feel now is with technology and the opportunities available online and anywhere else, I think it's more accessible than ever. Yeah.
I would agree. I just think that businesses like network marketing, which I'm still, like I said, at the very end, at the very start, I was like, I'm still its greatest ambassador because of low barrier to entry, low cost, low risk, other than dickheads being like, it's pyramid scheme, you know, like all the silly things. But yeah. Well, we are at the hour. I think we're just on the hour, over the hour.
Jeez.
I know.
We didn't even talk about Bitcoin.
I know. I'll have to get you back in and we can have a really beautiful, I say beautiful conversation. No, as well, because I'll wrap it up because I keep saying this to every guest because it is so juicy and people are in love with these conversations. But I would just suggest to everyone, obviously go and find Lloyd, listen to his podcasts and get his books. I got Lloyd on because I'm friends with these legends. I was at your book launch. I've known you for several years. I've wanted to actually get Lloyd on forever, but it was a sunny Sunday, last Sunday, I think it was. And I had been meaning to read your book and after the book launch, and I knew I wanted to just devour it. I took it to the pool. I read the whole, I ended up coming inside. I was on the couch. I wasn't there but I devoured your book in a day. And it's long. Like you can't, I am a fast reader and all the things, but I genuinely didn't want to. I didn't want to put it down. I got so much value from it. We're actually now looking at a partnership with this because if we leave,
great,
we are like, well, we're going to bring someone in and put a profit share partnership on it, which was inspired by your book. So I took so much from it. Like, what's it?
Become Time Rich.
Become Time Rich. I was like, money grows on trees, but that's the podcast.
The other one, yeah.
But I will link all this in the show notes. So if you want to find Lloyd, I would highly recommend it because like I said, I got so much from your most recent book. I need to read the other two. How many have you written?
3.
Yeah, I was right. Yeah. I haven't read the first but 2, but I've read this third and fell fucking in love. So with the knowledge that you have and just the way that you've pieced it together and
Well, I got some practice from the first 2.
Yeah, I probably won't go read them. I'll be like, this is shit. But yeah, I will put you in the notes so everyone can find you. Just well done, both of you. I know Alicia's sitting back there. And it's like, as much as I've had Lloyd on, I know it is a team. Like
totally.
It's a partnership. It is just a true partnership. And you could have gotten on the mic and talked about this as well because you were
way funnier than me.
Yeah.
No.
Liar.
That's pretty funny.
No, you're funny. You're the best. And I know, and we're also on our IVF journey together. So I'm actually going to get Alicia on and we're going to talk about
We've done a lot of life together.
We have. It's wild. Travel the world.
Good. We have.
But thank you for coming on.
Thanks for having me on. I really appreciate it. This is a great podcast. Love your mission. I've been looking forward to this, so thanks for having me on.
Yay. I'll bring you back and we will talk all things. I actually do want to get more into your book. I'd love to actually have you in and talk about the book and the principles in it.
Yeah,
because like I said, I am a smart, intelligent, well-read woman.
Yeah.
And it's rare a book, firstly, that I binge a book, and second of all, that I implement a book.
Yeah.
I'm inspired by books, but there's things that I'm like, I know it, but I've taken bits of it and it's propelled me forward. There was elements that I immediately implemented that have changed the game. So I'm going to get you back in and we'll talk about the book.
Sounds good.
Okay.
Thank you.
Until next time, everyone, as I always say, stay wild.
Thanks so much for listening to another episode of Anything Goes. And if today's episode gave you maybe a new perspective, a little bit of a laugh, you learned something new, or just loved our trip to Taboo Town if we went there, it would honestly mean the world to me if you could leave me some love with writing a review and sharing this episode to your socials. You have no idea how much that helps my little podcast get out in the world. If you love what you gain from these conversations weekly with me as well and want more than just listening in, come and join my inner circle. It's my monthly mastermind where for just $47 a month, the real magic happens. You get me up close, no filter, live coaching. And if you get what you get from this free podcast, imagine what you get in a paid container. Links are in the show notes, friends. And until next time, stay wild.